Just when you think things might be improving because inventory levels have increased, we've seen home prices come down in some markets. In fact, we've seen interest rates come back down. You get news that there's a big investment property that's looking to buy $5 billion worth of property. That's right. Today in the Wall Street Journal, there was a news article that posted that we're going to actually take some highlights from, look over that, this investment company, if you will, is looking to partner up with a pension fund as well as a foreign investor to buy nearly $5 billion worth of property. That's 18,000 properties. Now, we're going to talk about the area that they're looking to do this in, but what that's going to do is almost put a floor in the housing market in those markets, right? Because if you've got these investment companies looking to come in and more or less purchase property regardless of the condition at a certain price point, then properties below that, properties are never going to go below that price point, if you will. So let's take a look at the article, take a look at some of the highlights, because I think this is interesting and I think you're going to see more of it as we start talking about the rental market. In fact, last week I posted a video that I feel like is the next crisis coming, if you will, and it's the rental market. Just because people are getting evicted, there's a lot going on, on that front. But the rental market is already a problem. There's low supply, very, very high demand, which we're going to reference in this article, and that's one of the reasons that companies like this, these big investment companies, these big pension fund companies are actually buying rental property, because it's, if inflation is a real thing and prices are going to continue to go up, this gives them an advantage to having a fixed income come in every single month, taking money out of equities, if you will, the stock market, things like that, and have a fixed income coming in every month for their investors. That's huge. So as I mentioned, the article references one of America's biggest landlords is teaming up with an insurance company, a global investment company, and a Texas pension fund to buy $5 billion of U.S. houses to turn into rentals. This is Tricon Residential. They're a Toronto-based company, so they're coming out of Canada. They operate one of the largest pools of U.S. rental homes, and said it has struck home buying pact with the Teacher Retirement System of Texas, Pacific Life Insurance Company, and one of the company's existing foreign investors, which it declined to name. So a lot of you guys have been talking about foreign money coming into the country. This is proof that there's still foreign money out there coming into the country. Now, I've seen it diminish considerably here in Southern California with regards to foreign buyers. Most of the buyers that I come across are people that actually live in the United States at this point, but we're talking big money here, and we're talking, $5 billion. So Tricon currently operates 25,000 U.S. rental homes as well as several apartment complexes in the U.S. and Canada, and says it expects to buy about 18,000 houses through the new venture. This is actually going to be spread over 3 years. They're going to average around 6,000 homes per year. Now you might ask, why are they buying all of this investment property? What's the reason? Well, they go on to say in here that they currently get about 6,000 calls a week for a home when they've only got 200 available. So they're getting 6,000 calls every week for investment and rental property, and they only have 200 properties available. So they see an opportunity. They see an opportunity to have more renters come in and pay that fixed amount every single month. And that's why they're buying more property. As they mention in here, you see they want to take advantage of that demand. Now, a lot of these companies, as you've heard me talk before, started buying property in the last downturn, and that's what helped put a floor in pricing at that time as well. That's why we stopped seeing a decline in prices at that time, because investors stepped in, kind of put that floor in pricing, and then pricing continued to go up from there. We're seeing more of it now, and it actually goes back to the beginning of COVID once people were locked in. You can see in the article here that they say when COVID-19 hit and demand for suburban rental shot up, they ramped up their purchasing with billions of dollars from institutional investors seeking investment income. Now, in many of the hottest markets, including Phoenix, Miami, and Houston, more than 1 in 5 houses sold is being bought by an investor. So, you've heard me talk about this as well, where we've talked about who is buying these properties. And at one point we looked at the numbers, and 25% of the purchases for that period of time were cash purchases, and a lot of that is coming from investment money. Now, again, I'm not seeing it as much here on a one-for-one basis when people are buying property. A lot of the properties that I deal with are people looking to occupy the homes. But when you see bulk purchases like this, a lot of properties being purchased at one time, investment money, their sovereign wealth money, pension fund money, a lot of these big companies looking for a fixed return every single month are looking to buy investment property because the rental market is crazy, and it's only going to continue to get worse as housing prices go up, right? People can't afford to buy property, therefore they have to rent something. And that rental market is going to continue to skyrocket, which makes owning these investment properties very, very lucrative. And therefore the reason that these pension funds and these big sovereign wealth funds want to get into that business. A lot of you will say, look, they're just looking to purchase these properties and sell them later. And the reality is they're not. Like I said several times in this video, they're looking for that fixed return. So over the last year, they've actually seen new lease rates up 16% from a year earlier, and renewals rose by 4.4%. So even though rents have gone up nearly 16% over a year, 5%, 4.4% of those people are actually renewing their rents. The other people are new people coming in. But this is going to continue to push house prices sideways to up in a lot of markets. I mean, it's going to put that floor in housing prices. Now, this particular company is looking to buy properties around $250,000. So in a lot of markets, you might say, well, we don't have anything around that price point, so it's not going to impact me. That's understandable, but in the markets where they are flooding these areas, it's going to continue to push those prices up, making affordability a bigger issue. And they go on to say in here that Tricon tries to find houses to rent to people earning between $60,000 and $100,000. The firm believes that such renters are more likely to be long-term tenants, which means lower turnover cost and steady cash flow. So what does that mean for you as a potential home buyer? Well, it means that, in some of these markets, Tricon is actually looking to buy properties in the Sun Belt area. So if you're in that market, it means that it's probably going to be a little bit more difficult to purchase, especially if you're in that $250,000 price point and or lower, just because you're likely going to be competing against a cash offer. Now, if you're in other places in the United States, Dallas, Texas, Phoenix, Arizona, some of these markets, they also have big investment companies coming in and buying property, so it might be tough there. In higher price markets like Southern California, New York, some of these areas, you're going to see less of it, right? It's too much money to buy these properties. The return on the investment isn't really there, so less bigger companies buying it. But in smaller markets, where that are seeing a lot of growth, this is likely going to continue, which means higher prices to come in the foreseeable future, putting a further strain on supply. But what are your thoughts? Let me know in the comments below. Are you feel like you're coming up against investors when you're making offers? Are you seeing investment properties, being purchased, or properties purchased in your market that are being turned into investment properties? Would love to know what you're seeing out there. And as I get more information on things like this, articles that I feel like aren't, informing to you as a potential home buyer, I'll continue to put them out there. But for now, I appreciate you taking the time to watch. I appreciate all the support. Hope to see you again soon. Have a great day. Bye-bye.